Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.
Welcome back to the Market Prep video presented by Tackle Trading. This is Coach Matt Justice for Tackle Trading. Get in the game one trade at a time over there at www.tackletrading.com. Now, the market today continues its resiliency, leading its hard charge back up to the all-time highs, closing the S&P 500 closing above 2,100 for the first time since back in June and August, before we saw that crash midway coming through August, and it's been nothing besides resilient. And what I mean by that is, despite negative news, and I keep hearing all these economics, how we're going to add jobs, we're adding jobs, and you know what, we will add more jobs coming into this Friday with the unemployment report, but we're at 5.1% right now. This is after years and years and years, and if you actually look at the actual job numbers, they're not very good. They're not good middle class paying jobs. It's service related jobs. It's the baby boomers going back into the market. I'm seeing a lot of layoffs out there, and these people have to go somewhere because they're simply not prepared for retirement. And so I'm hearing these news reports from traditionalists out there like Bloomberg and CNBC and MSNBC, and I'm wondering where the disconnect in reality is. But the reality is the ISM Manufacturing report came in today at 50.1, and anything under 50 is recessionary territory. You're looking at some of the other economic data coming out this week. Trade balance has been negative for the U.S. Given a strong dollar. Manufacturing has been fairly negative this year, and really hasn't recovered to pre-recession, pre-crisis 2006 highs. Neither has housing, and unemployment hasn't reached there either. So we're crawling from an economic perspective. We're not. It's not robust out there, but still, this marketplace, in a zero rate marketplace, it is going to be absolutely, it's going to be a buyer's market. And once you start seeing the market go down in August and coming into September, and when the Fed delayed rate hike in September, didn't do anything in October, basically guaranteeing a very low interest rate, ZIRP type interest rates for the foreseeable future. I'm not buying that in December. We're going to see an interest rate hike, and even if we did, a 0.25 interest rate hike is not going to it's not going to kill the market. It'll strengthen the dollar a little bit, but I don't think it's going to kill the market either. But it's not even that. It's the ZIRP type policies out there in the rest of the world, with the Eurozone doing what they were doing last week, coming in. Now the Euro's coming right at $1.10 right here. Looks like they're going to further quantitative easing, and the Japanese look like they're going to further quantitative easing. So as long as you have the availability of free money, that money is going to be borrowed, and you're going to continue to see things like dividend increases and stock buyback programs, and you're going to see money coming into the market until we have some type of normalcy of monetary policy, which we're obviously not looking at here. So looking at the S&P 500, very kind of tough to say where it's going to go from here. Just in the last movement, you're up about 150 points without a retracement. Looking at the last year, we have not had that type of movement to the upside without a retracement. You are now approaching your all-time highs at 2134. That's less than 2% away already. The Dow's positive for the year so far. The S&P 500 positive for the year so far. The Russell 2000 kind of lagging here. If we look at IWM, small and mid cap stocks, they have not seen the rebound that the large cap blue chip stocks have. And if I'm looking for some companies out there, maybe look at some longer term large cap companies, blue chip companies, looking to short some on the smaller cap companies, because they just have not they have not recovered from where they were in June and August of last year. They're still down a good 7-8% off the highs. So if you're looking at some kind of where to put money, where to not put money, I'm not putting money in small cap right now. If you're looking at something, you're looking at your large cap stocks. Technology has been really positive over the course of the last 3 months. Industrial goods has been pretty decent. Utilities has been good. Consumer goods has been been decent. So you're looking at technology, utility companies, healthcare, biotech. They got a nice little day today. Healthcare did, but it's still down 8% over the last 3 months. When you're looking at the last 6 months, technology year performance, healthcare. So despite the fact that healthcare has been hit, it still looks pretty good from a long-term perspective over the last year. The best performing sector over the last year. Today, if you're looking at the last 3-month performance, technology, services, and basic materials with some industrial goods and consumer goods has really kind of led the charge, with Microsoft up 12% over the last 3 months, Google up 13%, Amazon up 18%, ExxonMobil up 11%, Chevron up 12%, GE up 14.5%. These are some of your hard chargers, your leaders over the course of the last 3 months. IBM Telecom Services down 10% in the same time frame. Citibank down 7.5%. One of the biggest laggards in the financial sector. Credit services, Ventus down 17%. Oil and gas pipelines, Kinder Morgan down 20%. WMB down 22%. So there's still a lot out there that, from a bullish and a bearish standpoint, right now I'm trying to balance my long-term stuff. I'm trying to, I'm definitely writing calls against the long-term stuff to lower cost basis, kind of lock in some of that profit, and I'm looking to rebalance, maybe as we're reaching the all-time highs, maybe a slightly bullish sentiment, but I'm going to wait before I get a little too aggressive on the bullish sentiment. I would wait for a retracement coming into there. The dollar index today kind of got a little beat up, nothing too dramatic here. Just came down just a tiny bit on today's price action. Still kind of in above these ranges, above 96.5. We're a buyer on the dollar. Above 96.5, we're a seller on the dollar. Underneath 96.5 right now. On crude oil, a little bit of a retracement on crude, up in around the 47 area. Starting to see a little bit of slowing momentum here. I'm seeing this as a little short-term bearish retracement, possibly a trigger underneath 45.5. So I am a seller underneath 45.5. On the S&P 500, looking at some intraday levels to kind of help you identify some of those intraday price actions where we're looking at. You do have resistance right now at 2092. That's right where it's at. That's an old resistance zone over here. You also have it down around 2083, down around 2074, and bottom basement before today's price action 2064. You really don't have any upwards resistance levels right now on the intraday charts. You obviously have that more on the daily charts, up around 20, right where it's at, 2100, right at a resistance level, I would say. And then the next one up 2122 and 2134 at the top side. Gold, for many of you, broke back down underneath the 1156. This is back to being a neutral call for me. Tim will have the commodity report later today. Silver, I'm looking to buy at 15. And so if silver gets like 15, 20, 15, I'm looking to be a buyer of silver at that level as well. And the VIX under 15, guys, long-term retirements with the VIX under 15 means it's really cheap to buy insurance on those long-term portfolios. A couple stocks in the news today. Visa in the news today, down 3.5%. Visa has been a very good performing. I guess not everybody liked the announcement that Visa was going to buy Visa Europe for approximately 23 billion United States dollars, 21 billion euros, and so that was kind of the news of the day today, looking for Visa to do that. But it's hard to question the validity of the bulls right now. They've been dominating for the last little bit, and I look as long as we have very low interest rate policies, zero interest rates, as long as the Fed keeps delaying the hike, and it's not even. The insanity of it right now is it's not even about whether or not they're going to raise or not. It's not even about whether Mario Draghi or Corrado is going to increase quantitative easing. Even the thought of it, even the talk of it, even just the very notion that we're going to have these types of policies, you're going to see equity value expand. So we'll talk more about that in the Coaching Show. Hope you enjoyed the market recap video for the Monday, November 2nd. This is Matt Justice for Tackle Trading. I'm out.
Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.